Welcome to the Professional Edge. My name's Todd, tax attorney, CPA, and certified financial planner. Host here on the Professional Edge for nearly 5 years. And this session, we're talking about what exactly is your grandchild going to inherit. Most of you have never given that consideration, so let's do that on today, and let's figure out what our grandchild is actually going to inherit. Well, we know that this one generation is stuck on these video games. So how can we incentivize or get our grandchildren incentivized to go to college? Well, in your estate plan, you could actually carve out a portion of your estate and basically generation skip your own children from their inheritance. And you say, whoa, I don't want to do that. Well, what we want to do is actually leave a legacy for our grandchild. And with that, we may say we're going to take $10,000 or $50,000. Let's stay with $50,000 and stay consistent. So we're going to leave our one grandchild $50,000 out of our estate, and the remaining balance is going to be split between our two children in equal shares. So that all comes into play, and it says, all right, let's take this $50,000. Let's place this in an education account. You can actually put that in a 529 upon your passing, or you could direct that this shall go to your son or daughter, and then they have an understanding that they need to place this in trust or in the 529 account for that grandchild. That's magic, because that way, underneath some states, they would get a partial tax deduction on their own tax return, at least the child would. Or we could actually split it between the two children, and with the understanding that they would then fund that grandchild's education account as well. So again, we're doing some estate planning, and then also being a CPA, we're also doing some tax planning for our clients. So that way we're going to get an education account funded, and if we drop in $50,000, we let it percolate and we let it grow. Then if it has 3 times to double at 10%, Rule 72 says that will be close to $400,000. So again, we are allowing time to be on our grandchild's side. And according to Warren Buffett, the 8th wonder of the world is compound interest. So again, we're allowing this money to work, and the magic of compounding actually happens at the very end of the time, because that's when you have a larger principle in which that compounding is going to apply to. So again, if you are basically doing documents on the websites and things such as that, well, here's the difference in working with a qualified estate planning attorney, that we actually bring up these items and say, hey, out of your estate, you may have a $500,000 estate. Time you add up your house, your cars, your bank accounts, your investment accounts, things such as that. What are you going to leave your grandchild? Have you ever considered that? Are you going to, put some seed money in an education account, a 529, or an ESA, an education savings account? Those have smaller annual limits on the amount of the contribution. But we're going to incentivize or allow the resources to be there for your grandchild to go to college. College, I don't think, is going to get any less expensive than what it is. It's probably going to continue to go up in price, because the price of not getting an education is even more expensive. So again, if this is something that you want to have a confidential conversation, in today's world of Zoom, we can schedule that and have a Zoom call, go through the information. Then we can draft the documents. Then we have to meet personally to review them, make sure they're copacetic with all of your desires and wishes, and make sure you have the right decision maker. And therefore, we would execute that, and we would be done. Put the dot on the I and cross the T. And now we know that your grandchild is going to receive some of your estate that you took to build and grow over your lifetime. So again, to have that conversation, give our office a call at 877-654-9798. That number again, 877-654-9798. Now, I know a lot of the listeners here on the Professional Edge don't just hang out with tax attorneys on a regular, consistent basis. So the place to get started on what things you need to consider for your estate plan, you can visit our website at emcadvisors.com. That is Echo Mary Charlie Advisors.com. And on the right-hand side, you're going to see the Ultimate Estate Plan Guide. Click it. It's a red button. Fill in the information, and we'll send that out to you carte blanche, free, gratis, whatever word you want to say. Americans associate with free. So therefore, put that in there, and we will get that information out to you. It's a 30,000-foot overview of what you need to consider in your estate plan. So again, going back to what will your grandchildren inherit? Well, should we let them inherit a business? Depends on their age of that grandchild, but leaving a business to a 2-year-old is not really going to be effective because they don't have a clue, and now we got to engage someone to operate that business until they're actually of age and maturity to operate that business. So what assets are you actually going to leave to that grandchild? Let's think about this. You were the lucky individual to buy Microsoft stock when it was trading at $20 a share. And you say, you know what? I want to give my grandchildren $20,000 of those Microsoft stock shares. Well, now it's trading north of $200, so there's great appreciation. And you say, I want to do something now today. And you say, I want to set up an account for them, and I want to transfer that Microsoft stock to them today while I'm alive so I can see that they have it. Well, here's the downside of that. Being a tax attorney and a CPA and an estate planning attorney, you just did a huge faux pas in the overall plan, the overall value transfer to that grandchild. And you scratch your head or you're listening, you're like, okay, tell me more. All right, here's why we're leaving money on the table and you're overpaying taxes. Because when you transfer that Microsoft stock to that grandchild today, then it is a gift. And therefore, when you make a gift, then the donee, that's the one receiving the asset, that's going to be the grandchild, actually receives the donor's basis, the one who's giving that away to that donee. So when you bought your Microsoft stock for $20 a share, and let's just say it's 100 shares, then you're going to have a $2,000 basis in that stock. Now, when you give it away and it's worth $20,000, guess what? That grandchild, if they would sell it, they would have a $20,000 sales price. But their cost basis is going to be what the grandparent actually paid for it way back when, and that's going to be $2,000. So now you're going to have to pay long-term capital gains tax on that sale of the Microsoft stock. Not you, but the grandchild would have to pay. So be careful with this napkin planning or Reader's Digest version of estate planning or LegalZoom. That's where this fails. It doesn't apply, or they can't give you specific client information. They do that disclaimer and say, we're not a law firm. Well, you know what? If you're dealing in money, I think I would pay for counsel and advice to make sure I do it right. Because just this simple mistake, and we've seen it done, grandparents give stock over to the grandchildren, want to see them have it in their possession, their name. They're trying to do the right thing, but now you've saddled that grandchild with an $18,000 long-term capital gain. And just quick math, it's 15%. That's going to be right at 10, 8, 18, or 9, a $2,700 tax bill that you just saddled that grandchild with. So let's think about this. How's the better way to structure that to get your Microsoft stock over to that grandchild? Well, let's leave it in your estate. And you say, wait a minute, I don't want to do that. I want my grandchild to have it. Well, it's at a cost. You want them to have it just in legal ownership? Because if they're just going to hold it, then it doesn't matter. But if they're going to sell it and dispose of it, let's not overpay $2,700 in taxes in our example. So therefore, what we would do is just say in your estate plan document that I hereby give my grandchild my Microsoft stock worth $20,000, period. Now, what difference does that make? A gift versus an inheritance? Well, the inheritance, the tax rules change, and it basically says that now that grandchild is going to receive a step up in cost basis to the fair market value date of death. So therefore, the grandchild is going to receive the same $20,000 of Microsoft stock, but through the magic of the tax code, then you get a step up in basis to the fair market value date of death. So now the grandchild can sell that $20,000 of Microsoft stock and pay zero capital gains tax. Wow, that right there, for listening to the Professional Edge, just saved in our example $2,700 of taxes. Now, that's worth the cost of admission, right? It's free. That sort of planning takes place all the time within our practice. And if these are things that you want to explore and how they would help you in your individual situation, do give our office a call at 877-654-9798. That number, 877-654-9798. And in today's world of Zoom, you can be anywhere. Your friend might have passed this podcast on to you, and you're in South Florida, and you're overlooking the water, trying to get some education regarding what your grandchildren are going to actually inherit. And at which point you can dial that phone at 877-654-9798. The number again, 877-654-9798. We'll schedule that Zoom call. We have clients in Florida, New Jersey, New York, Texas, California, Ohio, Michigan. So we are not just limited to individuals here in Georgia or in Phoenix City or Atlanta. So I'm very happy with that, and with today's world of podcasting, then these can be heard anytime, anywhere, 24/7. So again, I appreciate you tuning in to the Professional Edge. And if you like what you hear and you have a colleague that is thinking about doing some estate planning, do pass this link on to them. I would appreciate that. And I don't reach out. You have to reach out to me. And that way I'm trying to provide some information, just like leaving that Microsoft stock in our example to your grandchildren via your estate plan, meaning your estate, and they inherit, versus just giving them the stock today. So again, how is your grandchild going to inherit, and what are they going to inherit? So what are they going to inherit? Well, let's let them inherit a step up in basis in your fair market value date of death on that highly appreciated stock, Microsoft in our example. And that way they would not have to pay any capital gains, because they would get a new step up in basis to fair market value date of death and not keep the donor's adjusted basis if there was actually a gift. So again, my name's Todd, tax attorney, CPA, and certified financial planner, host here on the Professional Edge. And we're going to have more coming up on what your grandchild is actually going to inherit.
With today's financial markets, are you getting the personal and professional attention you and your money deserve? Clients of estate management counselors benefit from having one set of professionals advise them on their tax, estate planning, and investment advice. We call that the Professional Edge. Todd is a tax attorney, CPA, and certified financial planner. With over 15 years' experience, he welcomes the opportunity to assist you in preparing for retirement, implement effective tax planning strategies, and to help you properly plan your estate. His radio show, The Professional Edge, is aired weekly on Sundays at 9 a.m. If you're interested in meeting with Scene, call his office at 877-654-9798. That's 877-654-9798. Do you want to feel more confident about making the right investment, tax, and estate planning decisions? Today, these decisions are more complex than ever. Have you thought about working with a professional advisor and not sure who to turn to? Not sure what qualifies one to be an advisor? Todd is more than qualified as a tax attorney, CPA, and certified financial planner. Scene is with Estate Management Counselors. Estate Management Counselors operates as an independent fee-only investment advisory firm. They're dedicated to gaining a personal understanding of their clients' objectives and implementing professional counsel and advice to achieve those objectives. So take a second to talk with Scene Todd to learn how you can benefit from their multidisciplinary practice where they coordinate their clients' legal, tax, and investment strategies into one comprehensive and integrated plan to enhance and protect their clients' financial security. You can reach Estate Management Counselors and speak with Scene Todd by calling 1-877-654-9798. That's 1-877-654-9798.